Good morning, everyone. Hey, Ian, how you doing? How you been? Haven't seen you in a while. You guys been busy? Alrighty, so what do we have here? Well, overnight inventory was short. It's corrected, and now we're trading above the close. We did the classic look below and fail of yesterday's low. Grabbed that cheap stuff, found a bid for it, and straight up. Now, we seem to be correcting back down again, and I'm looking to see if I can tickle that short at 62, 63. See if we can bring it back down to VWAP. So there seems to be a bid here. There's yesterday's close. There's the overnight point of control. So I drew a bit of a bigger balance zone this morning. Let's see if this works. If you're short this area here, you're using 64 and 65 as your out. If you were already short, probably Cisco already was. Are they? Margins up today? I didn't even look. Thanks, Raj. Welcome to the folks on YouTube. I'm JJ. This is tradingsyndicate.org. Okay. Seems to have found a bid here at the 60s. Let's see what we do now. Yesterday's point of controls here. They sold a little bit of product above 50, above 63, 64, all the way up to 75. Not bad sales. Now, why am I thinking lower? Just because it's back and forth today, right? Let's check. Let's take a look at that order book. Yeah, it's thin. Well, last night, Ian, I guess they started attacking each other again, right? So naturally, we're going to have some bumping and grinding as this situation continues to play out. Yeah, I didn't even look at my email. So say you're short the 62s. I definitely look for bids somewhere here. Now, it kind of looks like I randomly look at places and find buying. But when you've looked at charts, you see that okay, there's been a bid here before, and there was a bid here and here. When you get those up moves, the bottom of those candles are where the sellers stop selling. That's kind of important for you guys to know. Okay. What is important in these markets is to know where they're going to sell into it and where they're going to stop. It's really that simple, right? What I want to do with people is I want to empower them to free them of all the rubbish that they hear on the internet and actually make money. So I'm test short 62 and 3/8. I've got a 60 and 3/4 bid, which is just under 61. Let's see if I can get hit at 60 and 3/4. I've got bids in at 50 and 60 flat. These are just micros, right? So I shorted 62 and change on just 4 micros, covered at 60 and a half. Now let me see, I've got 2 left. I'm going to put a 60 and a quarter bid in there, which I should have had in before. Flat hit that hit. Now I've got a 60 bid. Let's see if they hit me at 60. And if they don't hit me at 60, I'll just move that bid up to quarter and get taken. Or if they move it up too high, I'll just take the offer and get the hell out of the thing. Yeah, okay, I'm flat. So, I was short here, just here. These were my warning levels, and this was my out. Now, because I was trading micros, if it had taken this probably warning level or that one, I would have gotten out of it. I probably wouldn't have held on to 65, right? And I'm telling you guys, this is the best way to short. What do you do when you short? I'm going to talk about shorting a little bit because we talk about going long, but we need to teach you how to short as well. The problem is when people short, they don't understand why they're shorting. The reason that you are shorting is because this is the front side of the move, this is the back side. Okay? Front side, back side, front side, back side. You always want to trade the back side of the move when you're shorting. Why? When you trade the back side of the move, you'll see the candle highs keep getting lower. That means the market's being put on sale. This is the most simple concept you will ever encounter in trading. Right? Most people will ignore it. And you'll be looking for an indicator or a volume profile or something. But if you just pay attention to the accumulation and distribution of product as shown on a chart, which is what the chart's supposed to do, right? It's supposed to tell you where people are buying and where they stop buying and it gets put on sale, right? If you can identify really simple market mechanics, you're going to make your life so much easier. And you're going to make a lot more money, and you're also going to you're going to save money when you're getting stopped out. It's the simplest thing there is, and the least talked about thing and the least discussed. When I started retail trading, I'd go to traders, I'd go, "Where's the bid?" Hey, Taco. Okay. And then Taco will go in, or somebody will throw a chart in there, and you guys will all jump on the chart. Okay. How many of you are still listening to what I'm saying? Okay. Thanks, Moran. Right. So it's really, really simple, right? Here's the move I was looking for. What did I tell you guys when we started, right? Right? We want you to focus. It's kind of cool that Taco put that chart in right when I was talking about it, because as soon as somebody puts a chart in the room, everybody goes and looks at the chart. And I'm not saying don't go look at the chart, right? What I'm trying to do is I'm trying to get you guys to focus on what's important. Because that chart's not going to make you any money, right? As much, it could be George Soros could post a chart in the room. It's not going to make you any money because you don't know how to execute it, right? And that's the problem, right? That's the problem. The problem is that all the charts in the world, as much as we love the charts, aren't going to help us because we don't know how to execute the chart, right? And this is what I'm trying to teach you guys. If you're short, you can stay short. You should go and front run VWAP. Put your bids in here, right? Front run VWAP. Yeah, you're right, Imran. When you're trading on a small budget, you have to be much better. You have to be much quicker. You have to be faster. This is why I try and teach people to scalp. Because guess what? With a small account, you're not going to position trade, right? You can't be you can't have losses that are like 5, 10 grand a day with a small account, right? You have to be so much more shrewd. And shrewd means you have to be sneaky. You have to be like the thief in the night, right? And that's why I've been trying to do these execution classes and stuff because this spring I realized that people have a really hard time paying attention and listening, right? Yeah. Do you see the front running? Do you guys know what I'm talking about? Front running means buying or selling before a level because you know there's going to be competition there. Exactly, right? So if you know that there are buyers at a certain level, right? Your overnight cost basis has moved up. So if you know there are buyers at a certain level, that's where you cover your short. Now, if you're long, where are you going to sell? Say you bought 56, 57, 58, 59. Well, you know there's going to be sellers at 63, right? So go put your sell orders in and make sure you get taken, right? Now, after a liquidation and you get these big green candles, what are you looking for? What should you be thinking? Not, ooh, I missed the buy. That's not what you should be thinking. That's what everybody thinks, and that's okay. There you go, Italian trader, right? When you miss the buy, you should be wondering where they're going to sell into. This piece of information gives you a huge amount of information. Now let's see if 64 and 3/4 works. Yeah, it does to the tick. Now, if you're doing the look below and fail of 64, we did a deep dive. Where would it be better to buy? Now, you know there's going to be sellers at the top of every single one of these candles on this liquidation, right? So would it be better if the market went sideways here for a bit and then popped, or popped and then back down? The easier trade is to let it go sideways and then take the trade, right? So in this candle, we sit and see, does it stay over 64, right? So much of this is being patient. And the only reason you're being patient is you're being patient because you want the large traders to do the work for you, right? This move just told me quite a bit. Look how long it took. It took half an hour to move from 64 down to 56. And it took 1, 2, 3, 4 minutes to move back up to 65. You guys get that? This was half an hour. This was 5 minutes. Are there any light bulbs going off? I'm going to try and make you guys think a little bit this week. It's going to hurt your head. Okay? Yeah, definitely shorts are covering. But what else? It takes a half an hour for a market to go down, and it takes 5 minutes for it to pop right back up to that level. There's limited supply. You're close, Italian trader. What's next? Because you flush the supply out into wholesale hands. The supply's already taken up. That's why it's easy to move a market back up. It's so easy to move a market back up once you've flushed all those longs out. That's why you get what you just witnessed here. That's why you get moves like this. Do you notice this move here? Look, big flush. Like it takes 1, 2, 3, 4, 5, 6, 7, 6 or 7 weeks down, and 1, 2, 3 weeks all the way back up. That, my friends, that and that are the same thing. Do you guys understand what I'm trying to say here? Do you see this move and this move? They are exactly the same move. This and this are the same thing. On the right-hand side is a weekly chart. On the left-hand side is a 1-minute chart. The mechanics of the business never change. The chart just shows you the time frame of how things are changing. That's all you need to really remember, right? So now look above and fail of 64 and 3/4. Where are we looking for bids? Look for bids at 61 and then down here under 60. If we accept back above 65, no short. Right? This is a back and forth. This is what we call a two-sided market. In two-sided markets, you can short. The only reason why we're getting the ability to short tonight or this morning is because of the war. So if you're short 63, go throw a 61 and 3/4 bid in, and it'll tell you whether or not there's anything for sale. Your buy orders will tell you if anything's for sale. Your sell orders will tell you whether or not there's enough buying to take you at that price or whether you have to lower your price. All you are doing when you're going long is you are a merchant. You are a merchant selling ES contracts. You are also selling ES contracts that everybody else is selling. There is nothing special about your contract, right? Hate to break it to you guys, but you don't have a special gold-plated ES contract, right? They're all the same. So if you don't put yours on sale when everybody, if I've got 1,000 contracts and I paid 75.56 for them, and you have 3 contracts and you paid 75.63 for them, and I come along and put it on sale, guess what? Your business plan is ruined. So get the hell out of the trade. Is this starting to like come together in your heads? Can you actually picture this? Can you envision this? Is it something that, so that's 63 short. I couldn't get any at 61, so I bought them back at 61 and 3/4. Now, if we lose that seller, right? Now we have a seller at 63. If we lose that seller, you really don't want to be short. Now let's see if we can break the twos. If we can't break the twos, it'll just futz around here. There you go. Make a few points here, make a few points there. It adds up. All right. This is how you trade with what we call awareness, intelligence, skill. It's one thing to be able to see a market and post a chart. It's another thing is how are you going to execute it, right? Here's a tip. Say you're in the trading room, right? And I'm not trying to be rude or anything, but if you're in the trading room and you're watching a trade and somebody posts a chart, should you go look at that chart? Good. Thanks, Doc. It'll be there later, right? This is a little tip that's going to help you, right? Right? Unless I post something like, right? And I'm just saying that not because the person posting a chart is wrong. It's that I've done it too. You'll be focusing on where's the bid at 62? Is the bid, so you can see that there's a bid here, right? If you focus on this and someone goes and posts a chart in the room, you're going to take your focus off that. And if you lose focus for even 5 seconds, you're done. Why am I going why am I berating you guys with this stuff? Right? Because you're going to need it. You're going to it's it things are going to get crazy this summer and you're going to need to focus, right? It's true, right? Everybody has I'm not immune to it. I used to do it too. People, oh, what's he looking at? What's he there? And you don't know if they're making any money or not, right? Focus on your business, right? And that's why I'm talking about this because these markets are going to get harder to trade. I'm flat. I already took a short. I took a short from 63 down to 61s. If you are still short, you're looking for a break of 58 down to VWAP. Right now I'm flat. I like to trade from the edge. Jay Reardon. So the look above and fail was a nice trade. Now it's just right here in the middle. There's no trade for me. Exactly. So people who are on YouTube are probably wondering why is he talking about? Am I in Chicago? No, I'm not in Chicago. I'm in the UK. So people on YouTube are probably wondering what I'm talking about. I'm talking about why retail traders don't make any money, which is pretty much 99% of retail traders don't make a dime. The reason they don't make a dime is number one, they don't know what to look at. And number two, when they know what to look at, they can't focus on it because they're focusing on a million other things, right? Do not lose focus. This market is going to get harder and harder to trade. This war is not going anywhere. There are going to be news headlines that we're going to take you out of trades, big candles. We've seen that already. Make sure that you're dialed in. If you're not dialed in, don't put money at risk, right? Exactly. Nobody else is going to do your job, right? Yeah, so I'm in the UK. It's 8 o'clock in the morning here, 8:20 in the morning. So if you're in Chicago, good to see you, right? Welcome. So my name's JJ. I'm vwaptrader1 on X, and what we do here, Jay Reardon, is we teach normal people how to make money. We teach them when to trade and when not to trade. Like right now, there's no trade. There's nothing for you to do. You can go long, you can go short. There's no edge right here. That's why I'm not in a trade. Right? I only take a trade when the market gives me a valid business reason to take a trade. Every trade has a business reason. If you don't understand why you're taking a trade, there's a 99% reason chance that you're not going to make any money. If you're just trading to be trading and you don't understand the underlying business reason for the trade, it's not going to work, right? It's not going to work. So come to the trading syndicate, we'll teach you. I do. I do, sir or ma'am. So if you come to, I also do one-on-one mentoring. And this is that's our website. And this is me on X. If you need any help at all, please reach out. And what we do here, everything we do is practical. So it's why would I take the trade, right? What is the business reason for the trade, right? And is it viable, right? Is it an economically viable business transaction, right? You got to be aware of that. Everything we do is really simple. So right here, what's going on is we're still in distribution here above VWAP. We're in distribution of everything that we bought underneath VWAP. If you go look at, see, markets are really simple. We're taking all this cheap stuff that we bought from the liquidation and we've been selling it here. Now, what we had to do is we had to put it on sale and mark it down. So we found buyers here at 56 because they're front running VWAP. Now, if we have to put it on big sale, we'll come back to what we call our cost basis. So this chart is very simple. The cost basis is blue. This is 2 times profit. This is 4 times profit. And the red is 2 times discount, right? Because it is it's a market, right? So you have profit and discount from where the large traders bought their product. So we know that we shouldn't be buying up here, and we know that we shouldn't be shorting down here because you're on opposite sides of cost basis. This way it keeps us grounded, and it also tells us, okay, so right here we're waiting for the next move. London's opened, not much going on. The trades that we'd be looking at is we'd love it a look below and fail of 47 and 3/4, or to get back up to 64 and come back in. We like to trade from the outside to the middle of the zone. When the market's in the middle of the zone, we leave it alone. We leave that for the large traders to work out. This way, you don't waste your money. Because, we don't have the liberty or the luxury of being offside 20 grand in a trade like an institutional trader, right? It's not a problem. 15, 20 grand, that's nothing. They spend that on lunch. We don't have that luxury. So we want to make our trades count. So we mark off where the sellers are going to be on the 1-minute candle chart, which is probably the most useful piece of information that has been overlooked because everyone's trying to sell you expensive software. But if you mark the tops of the candles are where the sellers initiate. Now, how do I know that? Because I've been a size seller all my life. I've never been a retail trader until after my heart attack. Right? I am the top of the candle. See how we got there? See how we got right to the top of the candle and the price came down. So if you were buying at 61, 62, at 63 you got to sell some. Why do you have to sell? Because somebody else is going to. See? And you're right back down to 61. It's okay to buy 61 as long as you know where to sell. A lot of people buy something and they hope it goes 20, 30 points higher. There's no way it's going to do that. Right? This is what you should be focusing on. You shouldn't be looking at moving averages now. You shouldn't be looking at anything. You should be looking to see where they sell, and then you go and look to where they stop selling. So the top of the candle is where the sellers initiate and push price down. The bottom of these candles are where they stop selling. Now, why do they stop selling? Because they see buyers and they're going to raise price. It's that simple. And that, my friends, is trading. And what we do is we build a business plan to take advantage of the business. So when they stop selling, and they've proved to us that they've stopped selling, and I'll show you how that's done, we buy. When they initiate selling, we can short. When they stop selling, we cover. It's that simple. It's not rocket science. The execution is difficult. That's why we practice execution all the time. And then when markets change, we have to practice how to adapt our execution, right? Alrighty, that's it for me. Have a great trading day. If you want to learn how to do this with some intelligence, instead of just blindly following moving averages and Twitter and all this crap and not making any money, come learn how to trade at Trading Syndicate. If you're interested in one-on-one mentorship, I offer lifetime one-on-one mentoring. So you pay one fee and we work together as much as you can handle. And I basically haunt you until you're profitable. So reach out. I'm JJ. Thank you so much. Appreciate you guys. And you guys in the room, focus, right? Focus, 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 right? Keep your eye on the ball, okay? Do not turn your back on this market, my friends. It's gonna get crazier as we go. Probably the next 2 years are gonna be nuts. So my pleasure, Jay Rudin. If you need any help, reach out. You can DM me anytime. Thanks, everyone. Have a wonderful morning. Don't take candy from strange market makers, and we'll see you at 9:15 Eastern Time. Bye for now.